Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, August 24th, 2020, and I am pre-recording this Trading Places Live for Tuesday, August 25th. Currently after hours, futures are up a bit. Saw the Dow doing a little bit better than the NASDAQ. That was a theme on Monday, and that seems to be continuing in after hours. We'll see if that continues on Tuesday. Today's agenda, we're going to get into that daily market recap for Monday. Then we'll talking technically about some of the transports, maybe a little bit of that growth versus value. And then wanted to mention a few changes taking place in the Dow Jones. Then we'll get into relative strength. Industrials, small caps have been struggling, but small cap industrials have actually been outperforming their larger cap competition in the XLI. So go through that just briefly. Then get into earnings spotlight and wrap up the show with the three you must see. Before we get into any of that, I do want to just point you over to earningsbeats.com. We have a free Earnings Beats Digest newsletter, comes out Mondays, Wednesdays, and Fridays. If you're not already a subscriber, it is free, no credit card required. You can unsubscribe at any time. Simply go to earningsbeats.com, fill in your name, email address, hit the subscribe button, and you'll be good to go. A lot of the themes that we talk about in that newsletter are the same themes that we use in putting together our portfolios. You can take a look and see we've got some pretty good results relative to the S&P 500 since we started these portfolios over the last couple of years. And again, many of those themes are discussed regularly during these articles for Earnings Beats Digest. So make sure you go to earningsbeats.com, sign up, and we'll get you started on that newsletter. As far as the action on Monday, there was a change. At the open, it looked just like it's been. We saw the NASDAQ gapping up more than the Dow, more than the S&P. Apple, huge gain at the open. Same with Tesla. But then things changed, and it was very early on, the first 5, 10, 15 minutes. We saw a lot of rotation taking place. Many of the stocks that have been strong, many of those growth names selling off, while a lot of that money rotated over into some of the stocks that have really struggled during the pandemic, many of the airlines and the cruise lines and so forth. So it was definitely a different kind of a day on Monday than what we've seen here over the past week or two. And that may, or I should say that may continue here in the short term. So we'll be watching that on Tuesday. But the Dow Jones did manage a 378-point gain, so up more than 1.3%. The S&P 500 up 1%, first close ever over 3,400. Very nice day on the S&P 500. The NASDAQ was higher. It wasn't that it went lower. It's just that it struggled after the opening bell on a relative basis. But the NASDAQ was up another 68 points to 11,379. Mid caps and small caps showed some leadership. We hadn't seen that in a while. Nice bounce on both of them off of their 20-day moving average. I think that's significant technically. Energy, which had been weak, led the action on Monday. Also financials and industrials, which are two of the groups that have struggled, especially the financials, falling back just below their 20-day moving average recently, climbed right back above it on Monday. So pretty good action there. Materials, which had been rebounding and became one of the best sectors, at least in terms of scooter scores among the sector ETFs. But last week or so, you can see a little pullback, went back to that 20-day moving average. But the good news, on Monday, we bounced right off of it again. Consumer discretionary, even though it did underperform on a relative basis versus these other four sectors, this group continues to be on fire, just continues to push higher and higher. I think XLY looks good. Many of the industry groups within the XLY are breaking out. So some that have been lagging are making the breakout. We're seeing really solid rotation there. So I like what I'm seeing in the discretionary space. 10-year Treasury yield didn't have a whole lot going on in terms of economic news on Monday. We will pick up a little bit on Tuesday. Got a few housing reports out. The June Case-Shiller House Price Index is expected to rise 0.1%. May was flat, so we are looking for a little improvement there, but it's a June report, so we're still looking in the rearview mirror. Also, June FHFA House Price Index will be released in the morning, expecting 0.3% rise. May actually saw a decrease of 0.3%, so we're looking for more improvement there. August consumer confidence will be out. 93 is the estimate. July was 92.6. So again, a little bit of an improvement there expected. And then July new home sales at 10 a.m. in the morning will be out. The expectation is for 774,000 units. June was 776,000 units. So a little decrease there. Kind of surprised that there's an expectation for a decrease. I actually think it'll be higher. We'll see what happens in the morning. But when you look at the 10-year Treasury yield, there's some positives for sure. We moved up, came back down. You can see this hesitation on Friday right at the moving averages. Nice reversal. Today we were below both moving averages again, came back up and finished on the high end of that stick, that candlestick, which was awesome. If you look back to what happened in June when we made the break above the moving averages, we went right back down below. There was no hesitation, not holding the support, actually traded back below that 20-day moving average for about 7-8 weeks. But now that we've come back above it, I'm watching these moving averages. So far, so good. And when the move is up in the 10-year Treasury yield, that generally coincides with move up from the value stocks relative to growth. Not always, but at least initially, I would expect if we continue to see the 10-year Treasury yield move up, I think you're going to see financials doing pretty well. Industrials will probably do well. Maybe we'll keep that strength going for a little bit longer in the energy area. I do expect all the market to do well. I just don't know if we're going to continue to see that leadership in the short term from areas like technology or maybe even consumer discretionary. All right, let's keep moving. We got transports. I want to go over transports here and talking technically, because if you look at the 10-year Treasury yield, you see this move up. Normally when the 10-year Treasury yield's moving higher, we get transports going. So here was the move up, and then we pulled back. But look at the transports. Here was the big move up, but we didn't pull back. We just simply went into a little flag position. And then as soon as we get a little strength in the 10-year Treasury yield, we break out again on transports. I think that's really bullish. So within the transports, of course, we've got the truckers. I think this is still the hottest part of transportation. We haven't even had a 20-day test since back at the end of June. So we've been close, but we haven't gone back and tested that 20-day moving average in over 2 months. And I think that's a very bullish development and something to continue to keep an eye on. I expect truckers to continue to do well. And if transports keep doing well, the market should hold on to all of its recent gains and maybe even tack on some. The railroads. I think the railroads not doing as well as the truckers, but not bad. Big move up. I think there's your flag. Waiting for this breakout. I think this could happen on Tuesday. Watch the railroads closely, because those February highs that we saw earlier this year, just above 2,600 up to about maybe 2,630 or 2,640. We're at 2,650 right now, and this is where we've been hesitating. If we get a big move, you see 2,700 print, I would expect the railroads are probably going to be off running again. And then finally, the airlines. Airlines had the biggest gains on Monday, no doubt, but they also had a lot more room to the upside because they just haven't really participated very well. So yes, it was an 8% gain. Nice to see. Bouncing off the moving averages, which was nice. If you notice back June, and this kind of gets back to what was going on with the 10-year Treasury yield, we were trending down below that 20, came up above it, and when we came back this last time, we've held that those moving averages, and so has the airlines group. So whether or not we can get this move up and break through about 151, 152, that remains to be seen. But if we do, this is a group that could run back up to that June high around 180. That would be another 36 points from where we are, which is about 25%. That would be quite a move on the airline group. But we got to get through that 151, 152 area first. All right, let's keep moving on. IWF. I wanted to talk a little bit about the growth versus the value. First thing, when you look at this chart, you just see, okay, growth shares are going higher and higher. I get it. I think it looks good. I'm not saying we're going to pull back, but we might see a little bit of rotation. The reason I say that, if we look at this 10-minute, 5-day chart, look at what happened at the open today. You see this big sell-off? That was almost exactly what we saw on the NASDAQ in general and in technology. Here was the open, the big move down, struggled to get back through even those midday highs. If you look at technology, same thing, moving down, filled the gap, came back up, unable to clear that. Not bad. I mean, we're still in an uptrend, but when you look at what happened during the day, and I'm going to pull this up, IWF versus IWD. And I also want to bring this up in with a solid line as opposed to a candlestick. See the difference here? I mean, you see what happened after the open? We got that big jump. This is growth outperforming value at the open. But the rest of the day was a completely different animal. And when you look at the last several days, we've been, maybe a little bit lower in the morning and then rallying throughout the day. Today was the opposite. We rallied in the morning very early at the open, really, and then sold off on a relative basis the rest of the day. And that can be a short-term game changer. If we pull this up over an hourly chart, and I'm going to stretch this out. Let's go back. Let's go out a couple months. So when you get these moves up, I mean, we can see changes for a period of a few days, and you can also see some serious weakness on a relative basis for a few days. We saw that back in the middle of, or maybe the second week of August. We saw it back in the middle of July, a couple of different times. So off of this move, I mean, we've seen these moves to the upside, but we can also go through periods of weakness for a while. It looks to me like we may have started one of those periods. Be interesting to see. Tuesday will be important to see whether or not this relative downtrend continues. If it does, then I would continue to look for areas like the airlines, like the recreational services, like transport or travel and tourism. Expedia was a stock I mentioned yesterday in the 3 you must see. That stock looked to me like it could go up to about 95, went right up to that area, might have even finished 96. But those are the kinds of stocks when money rotates and switches, those are the types of stocks that could benefit. So that's what I would be looking for primarily on Tuesday. Wanted to also mention there are some Dow changes coming. So it was announced that before the market opens next Monday, Salesforce.com, let me pull these charts up and show you these charts. Salesforce.com is going to replace ExxonMobil in the Dow. Here is Salesforce.com. I'm going to bring this up on a long-term chart so you can see the strength in Salesforce.com over the last decade, 11 years or so, since that 2009 low. Then look at ExxonMobil. Had a little bit of strength, maybe up until 2014. And we are now back at where we were at the 2010 low on ExxonMobil. So definitely the Dow getting a boost going with Salesforce.com. Also, Amgen will be replacing Pfizer. And Amgen coming off that 2008-2009 low. You can see the move here. Pfizer, on the other hand, Amgen went up 6 times over the last 10 years. Pfizer's up about 3.5 times over the same time period. So Pfizer hasn't been a bad performer, but Amgen has been a better performer. And like I said, Amgen replacing Pfizer. And then the last one will be Honeywell replacing Raytheon. So you've got Honeywell, which has been rolling off of 2009 lows below $20. It is at 159, so it's up about 8 times. And Raytheon, which is RTX, is sitting at about 60, a little above 60. Its low was also just under 20. So a little difference there. So definitely trying to spice up the Dow a little bit, maybe to perform better as we go forward. So those are 3 changes that will be taking place before the market opens next Monday, August 31st. All right, let's move on to relative strength. And in this section or segment, what I want to talk about is the PSCI, which is small cap industrials, relative to the larger cap industrials found in the XLI. And I was kind of surprised when I saw that this uptrend was still in play off of the April low. But if we annotate this and we connect these lows, you're going to see, I mean, we've got a pretty nice uptrend here in play. And I don't know, maybe not perfect, but something like that. Nice little channel maybe that we can watch to the upside. But as we've pulled back here in August on a relative basis, I think that could be creating some opportunity for the small cap industrials. And so if the industrials, I said money is rotating, industrials did well today. If that continues into Tuesday and for the next several days, not only could we see money rotating into industrials, but we also could see the small cap industrials starting to move higher again against those larger cap industrials. So check out the small cap industrials. I actually have one for you in the 3 you must see in just a little bit at the end of the show, maybe 10 minutes or so. And I want you to maybe keep an eye on that. There could be some others, but one in particular I'll show you there. All right, earnings spotlight. I want to get into a few companies. Only one reported after the bell on Monday, and that was Palo Alto Networks. And I was a little surprised. The stock was down almost 3% after hours. I was looking for a pretty good report and a good reaction. And I'll tell you why. When you look at the relative strength, this is a stock, Palo Alto, PANW, that has been moving up solidly relative to its telecom equipment peers. And it's also just recently was near a 52-week relative high to the S&P 500, and it's been trending higher. The biggest problem is the fact that the group itself has been so weak relative to the S&P 500. But in Palo Alto, you've got one of the leaders, and I really thought maybe we'd see a gap up with this report, but instead we are trading down about 3% after hours, and we'll see whether or not we can recover that on Tuesday. Other upcoming earnings, Salesforce.com just mentioned being added to the Dow. They actually report Tuesday after the bell. So I wanted to pull this chart up and take a look at it, see what we've got here. And I'm going to go through a number of these earnings reports due out over the next couple of days and just give you my thoughts as to what I would be looking for given the relative strength in the stocks. So let's take a look first at Salesforce.com. Not sure what happened there. There's probably a little misprint there on the software index. But software has continued to be one of the best areas of the market. And Salesforce has been pretty strong relative to the S&P. It's kind of done okay versus the software group as a whole. And so I'm kind of anxious to see how it trades tomorrow, given the fact that it is being added to the Dow. So when I looked after hours, and there were several stocks that were moving after hours, Salesforce was one of them, and it was up about 3%, 214.80 from its 208 close. So it does look like it's getting a nice pop after hours. It's at a 52-week high, so things are certainly moving in the right direction. The other thing I like about the stock is that we have been seeing the stock being accumulated. The accumulation distribution line continues rising. I think that's bullish as we head into earnings. So a lot of momentum here with the stock as we go into its earnings report after the bell on Tuesday. All right, next up in terms of earnings, let's look at Medtronics. Many of the stocks in the healthcare space struggling of late, and not quite sure why. It could be a lot of jockeying with the election coming up. A lot of times healthcare can be a little bit dicey as you head into the election season. And as a result of that, we actually cut down quite a bit on the number of healthcare stocks that we had in our portfolios for the next quarter because we were a little concerned about having too much exposure in healthcare with an election pending. But when you look at MDT, this is not a stock that's been doing much. It set a high back in mid-April, and it has yet to get through that. 102.50 to 103 has been a really big area. Medical equipment stocks have done well. You can see from the high in mid-April, they continued moving higher. So this weakness in Medtronics over the past 4 months or so is more isolated to that company, not necessarily to the peers in the medical equipment space. So Medtronics on a relative basis has not been very strong. I wouldn't be looking for a whole lot from the company, but if we do get a surprise, a positive surprise, watch that 103 level. Intuit will be out Tuesday. And Intuit, nice breakout here over the last few days. Rising volume, which I think is nice. Accumulation distribution breaking out again. I think Intuit looks pretty good heading into its earnings, and this is one I'd favor. Autodesk reports tomorrow. And Autodesk also just breaking out. Accumulation distribution looking very solid. This is another stock that I would be favoring heading into its earnings report. Bank of Montreal, I'm not a huge fan of many banks. And when you look at the relative strength, this is one that's been doing very well relative to the bank index. So if you're a fan of the banks, you're probably happy to see one of the late leaders reporting. So if we get a leader coming out and maybe, you know, posting some good news, the group hasn't seen a whole lot of good news, but if we can get some good news out of one of the leaders, maybe that'll help to spur even more rotation into the bank group on Tuesday and later this week. Best Buy reports on Tuesday. Look at the move in this stock. I mean, we're talking about from under 50 back in March. Now it's up close to 120. Volume's been coming in of late. The accumulation distribution, up here has turned back to the upside, which is good. And it's in one of the strongest areas of the market, specialty retail. The group really hasn't had much pullback since that March low. For the most part, just going up, up, up. And look at Best Buy relative to the group and relative to the S&P 500. Very strong. So I would be looking for some good news coming out of this report on Best Buy. How about ATHM? This is Auto Home. I'm actually just watching this overhead resistance. This is a high that was set back in the middle of January 2020, just above 90. And look at all of these tops coming in between 90 and 92. Just can't seem to get through. Can we get that catalyst with the earnings? It's possible, but I want to see it first. The Specialized Consumer Services Group pulling back here over the last 2 weeks, but you can see challenging 52-week high. So if we get a breakout Specialized Consumer Services, that would certainly help Auto Home, but Auto Home is not one of the better stocks within this space. So if you're looking for stocks doing well within the space, I would be looking maybe at an eBay. eBay has been much stronger. Toll Brothers, home construction's been on fire. Toll Brothers also been moving very well. And look at the AD line now moving to about a 6-7 month high. The group, there's your home construction group moving higher. Toll Brothers with its earnings could make a pop, maybe break to about a 6-month relative high. That's what I would want to see. Still doing well versus the S&P, and there is your home construction group relative to the S&P, also doing very well. All right, just a couple more of these. I'm going to get into a few on Wednesday here in just a minute, but first let's pull up PSTG. This is Pure Storage. This is in the computer hardware area. Computer hardware has been doing really well. You can see down here, computer hardware. Look at this move to the upside. Of course, a lot of that's Apple, but even without Apple, there's a lot of computer hardware stocks doing very well. Notice, though, Pure Storage has really struggled to get a close up about 18, above about 18, 18 and a half. Just recently pulled back, tested this support area just below 15 and a half. So off of this uptrend, we have sideways consolidation. Really want to get the breakout here. On a relative basis, though, we're at a 52-week relative low to its computer hardware peers. So a lot of mixed signals on this one. I'd be a little careful as we head into earnings here. One other one from Tuesday. How about Urban Outfitters, URBN? It has begun to strengthen. I'm starting to see this a little bit with many of the stocks in the clothing area and some of them in the apparel retail group. But this is a stock that just had its highest close in about 2.5 months on Monday. We also saw the volume starting to tick up, accumulation distribution picking up. I don't know, maybe earnings will be that catalyst to really get this group going, or at least get this stock going. But it has been strengthening relative to its peers and relative to the S&P 500. So the group overall, though, even though it has strengthened a bit, we've got some work to do just to get back up to about a 7-month relative high. So some things look pretty good, but the overall, and this was the apparel retailers relative to the S&P. So you can see down close to a 52-week low, and we'd have to get all the way back up to this level to get to a relative high over the last 6-7 months. All right, let's move to Wednesday. Look at a couple of stocks. I'm going to start off with Splunk, SPLK. Splunk, after moving up, setting a new high in August. You can see on a relative basis, Splunk doing well versus software versus the S&P 500, but it's been consolidating. The good news is it held this 190 level, which was good support, and it looks like it still looks like it's trying to put in a cup with these highs starting to starting to trend back up again, getting through the moving averages. I'd like to see that hold, but at a minimum for sure, got to hold the 190 level. I think if you break below 190 on a closing basis, that would be certainly much more of a bearish development taking place here on Splunk. The accumulation distribution still strong. I'm not, I certainly wouldn't be giving up on the stock, but I do think you got to keep a stop in play, and 190 would be a level I'd be watching closely. Network appliance. Not really sure what the heck has been going on with this company, but man, it has struggled. It struggled back during the pandemic, got a little bit of a rally, but we're actually closer to about a 4-month low than we are the 4-month high. And that doesn't bode well. And again, we're in a group, computer hardware, that's done very well. Accumulation distribution is not bad. So maybe there's a little bit of accumulating going on under the scenes or behind the scenes. Look at the lows recently. If we look at the last 4 months, $40. We have not had a close below $40. A week ago, we went down and tested 40. We bounced off of that. So I would be watching 40 closely. If we can get back through the moving averages, maybe we'll have a run at 48 or 49. But network appliance reporting, I'd be a little careful here. ESTC, Elastic. I really like this reversal that took place back here in middle of August, but getting back close to the June lows that we saw, right around that 78 area, 79, got back to about 80, and then reversed off of this downtrend, and now we're in the midst of a pre-earnings run to the upside. This is a group that has, or a stock that has been doing pretty well relative to software, relative to the S&P 500, just set a new 52-week high. So this one's got a shot to come through for the software space. The only thing I would say is that because it has made such a big pre-earnings move to the upside here in the past couple weeks, you got to wonder if some of it's already built in. So even if we get a good report, or if we don't, I think the biggest thing here is the reaction to the report, much more so than the report itself. All right, let's keep moving on. I'm going to go into the 3 you must see. I'm going to start off first with the IWM. I think the IWM has a chance here to make a little bit of a move. We did pull back, hit this 20-day, and look at that reversal today. Nice reaction, reversing this downtrend. I think after the move up, a little bit of a flag back to the 20-day, and now we're bouncing off of it. This is where I would expect, if we're truly trending higher, notice back at the end of July, we came back, tested this 20-day, and then went back up again. That's what I would be looking for here. So this is one that I would certainly want to keep an eye on. Next up is REGN. REGN is closed below 600 for the first time in about 2 months. This is a pharmaceutical, and one of the pharmaceuticals that actually been doing very well on a relative basis. Accumulation distribution strong. I really would like to see 575, 600 area hold here on REGN. So I'm not excited. Volume picking up, closing below 600. Let's watch this one close. And then the last one I wanted to mention was the small cap industrial that I mentioned earlier. And this is one I showed you how the small cap industrials on a relative basis had pulled back, and this one is pulled back beautifully with it. Lighter volume on the pullback though. Moving back up above the 20-day here I think would be really important. So let's watch for this on Tuesday and see if we get a reversal. That is it for me. Want to wish everybody happy Tuesday, and I'll be back on Wednesday over at Earnings Beats. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.